Okay, hello everybody. Do you know you can trade? Oh, that's on a lighter note. Okay, today we're talking on order block and change of character. This is change of character. I don't want to write the full wherever. Okay, let me just write it. Change of character. It has different name. It can be change of character. It can be also. It's also called MSS. MSS means market structure shift. Market structure shift. So you can call it change of character or MSS, market structure shift. So I just want to talk briefly on this two order block, then change of character. First, let's talk on order block. I know a lot of us understand order block, we draw order block, but there are things that makes or that validates order blocks. We have valid order blocks, we have invalid order blocks. So there are some order blocks you are drawing thinking market will come to that place and mitigate it. They are not valid. And some things that makes an order block valid, one is a break of structure. For an order block to be valid, it must have one, it must have break of structure. Then two, it must have fair value gap. There must be that fair value gap. There must be a zone that market needs to fill, and there must be an inefficiency that market needs to fill. So there must be a break of structure, there must be a fair value gap. There are other things, but that is the two major ones that you need for now. Okay, let's go with order block first. It's called OD, or OB rather, order block. Now, when market comes like this, higher high, higher low, higher high, the moment market this high, rather this low, the moment this low breaks this previous high, which is this high, this previous higher high, the moment it breaks it like this, then you have your break of structure, BOS. Oh, BOS, not OB. Oh, sorry, I was talking about order block here. Okay, OB, yeah, order block. This is OB, yeah. So BOS, this is break of structure. So the moment this low breaks this previous high, you have your break of structure. You have your break of structure. Now, then market will pull back again. Then market will pull back again, then go up again, break another structure. This is another break of structure. This is called break of structure to the upside, because you are on an uptrend. So it's called break of structure to the upside. Now your order block here now, this is already a break of structure. So this place is your order block. This zone here is your order block. You see it now. This zone here is your order block, because first it has a break of structure. You see it now. There's a break of structure that caused this order block. And again, if you are assuming this is a chart, I would have shown the fair value gap within this range from here to here. There's what we call FVG. FVG. So from this place to this place, you will see fair value gap. There will be a candle that is just there that has not been filled. That candle is the fair value gap. So for you to have a valid order block, there must be a break of structure and a fair value gap. So when in a situation when, for instance, let's say another break of structure happened here, and this break of structure, or okay, let me draw another one now. Let me draw another one. You have something like this: higher high, higher low, higher high, higher low. Then this one comes like this. Okay, yeah, beautiful. Then this one comes like this. This one now is a valid order block, because one, it has a break of structure. It's a valid order block, and there's a fair value gap here. But in this one now, this one is not valid order block. Maybe market comes like this, then went up. This one now is not a valid order block. This one is not a valid. Why? It didn't break this structure. So you can't say this one is a break of structure. This one is not a break of structure. So you can't say this one is a break of structure. You get it now? So a valid order block must break structure, and it must have fair value gap. So this one now, you can take this one as your order block because it has broken this structure and it has broken this one too. So you cannot continue your order block. Wow, are you seeing my work? From here, OB. You see now? So that is your for order block. Now let me talk on change of character very swiftly. Okay, now let's talk on change of character. Change of character means or market structure shift. It means what it signifies that whenever you see a change of character or market structure shift, it means the trend is about to change direction. So for instance, if we are having an uptrend, higher high, higher low, higher high, higher low, higher high, an uptrend, right? An uptrend. This is an uptrend. This is an uptrend. There's a break of structure. These are order block here. Another break of structure. Now we already know this is an uptrend because we are having higher high, higher low, higher highs, higher low, higher highs. You know this is an uptrend. So what you are looking for here is buys. You are just looking, this is an order block. So you are just waiting for price to retreat to this level. Then you take your buy and you buy. Now, as the market is going, it gets to a point because the truth is whatever goes up must come down. So it doesn't matter how much the market is just buying to buy to a certain place, and the direction will change. Is certain in trading. So whenever, that's why they say history will always repeat itself in trading, and it's true. Whatever happens before will happen again. So it's just for you to know when that's happening wants to start. Then you jump in and take that moment and maximize that moment, or what's the word now? Maximize that moment. When the word come, we use it. Okay. So for a change of character to happen, a change of character is when this trend is about to change. Now we have this trend now that is, we already know this is an uptrend. Now the moment this is the last high, right? The moment this high now comes down to this level, and breaks this low, then we already have our change of character. Because in a normal sense, for an uptrend to continue, this low is supposed to be protected. Because for an uptrend, we have strong lows and weak highs. Strong lows and weak. When we say strong lows, mean the low is protected, meaning the one that is pulling back will not cross it. The moment it crosses it, something is already going wrong. There's already a sign that market wants to change direction. So the moment this market crosses this last low, this strong low, the moment it crosses it, this low has become a weak low. It's no more a strong low. It's not a weak low. Couple of a weak low. It's not a weak low. So as market crosses this low, it will pull back. So the moment you see something like this in the market, you have to be very careful and watch. That is when you sit back and be watching, because okay, market just crossed this. Now you can't really tell if market want to go down or it's just taking liquidity, because sometimes it can be just a liquidity grab. Market just want to grab the liquidity under here, then continue the trend. You get, so that's why you wait and see what is happening. So if market comes down, breaks this strong low, will be turning into a weak low, and it goes up and comes down again to cause a break of structure, now we have a change of character. Now the trend has changed to lower low, lower high, lower low, lower high. You see now? So that is how it works. The moment market breaks this, causes this change of character, then it comes down, then pull back, because market will always pull back. I always say that market breathes in and breathes out. It breathes in like this and breathes out, breathes in again and breathes out. Market always breathes in and breathes out. That is the thing. It breathes in, then breathes out. It breathes in, breathes out, breathes in, breathes out. So you follow the breathing of the market. So the moment market breathes, causes this change of character, then pull back, because it will always pull back. That's the breathe out. It breathes in, breathes out, pull back, then comes down. If it breaks this level again, causing break of structure, that means the trend has changed. So we have now moved from uptrend to a downtrend. I believe you've learned something today. In our video, we will talk more on break of structure. We'll still talk more on POI, and we'll talk on liquidity. Till I come your way again, do well to subscribe to my channel. Kengroy. Bye for now.